Good morning, distinguished speakers, guests, respected colleges, and industry leaders. It is a privilege for me to be here today at the BFSI IT Summit 2026. If I may borrow the quote from Lao Tzu, that a journey of 1,000 miles begins with one step. These well-known reflections by Lao Tzu serves as a fitting lens through which we can view the evolutions of Indonesia's digital financial system, what began at that time as an incremental innovation that has now developed into a complex and rapidly expanding landscape, one that holds immense promise yet demands careful stewardship. As we navigate this journey, we are confronted with a dual imperative to manage emerging risks with prudence while simultaneously fostering trust at the cornerstone of sustainable growth. In a digital environment where speed often outpaces certainty, regulations plays a significant role not merely as a safeguard but also as enabler, stability, and long-term investment. Our today's discussions on navigating risk and strengthening trust through regulation is therefore both timely and essential. It reflects our shared responsibility to ensure that innovation continues to thrive within a framework that protects consumers, supports market integrity, reinforces trust across the ecosystem, and let this forum serve as a meaningful step forward in that collective journey, one guided by collaborations, informed policy, and a common vision for a resilient and trusted digital financial future in Indonesia. Before we discuss around risk, trust, and regulations, it is important to understand the scale of Indonesia's digital financial assets ecosystem. This market has grown significantly, with more than 21 million registered customer accounts and transaction volumes reaching approximately 75 trillion year-to-date, and year-on-year 2025 reaching 382 trillion rupees. It indicates a high level of usage and increasing market activity, and even Indonesia is ranked 7 under Global Crypto Adoption Index. Beyond these figures, the ecosystem has become more structured and interconnected. Supported by a wide range of licensed institutions, Indonesia has a unique ecosystem where we have our own self-regulatory organization, the boards, the custody, and the clearing system to support the transactions, and around 1,400 tradable crypto assets. This rapid growth highlights not only the opportunities, but also the increasing complexity, reinforces the need for stronger governance, effective risk management, and adaptive regulatory oversight. A strong regulatory foundation is, of course, essential to ensure that the digital financial ecosystem operates with accountability, integrity, and trust. This foundation is built upon interconnected pillars, including governance structures, effective risk management, control function, transparency, and consumer protections, all of which support system reliability. At the core, governance and risk management are not separate functions, but work together to ensure that the institutions operate responsibly and sustainably. Strengthening these elements is not only about managing risk, but also building a transparent and reliable system that can support long-term growth. In this context, OJK is currently developing a regulatory framework on the implementations of governance and risk management, especially for digital financial assets, trading providers, in order to address increasing complexity and strengthen overall ecosystem performance. To strengthen the digital financial asset ecosystem itself, it is essential to establish a comprehensive governance and risk management framework. This framework outlines key components ranging from the roles of shareholders and oversight by the board of directors, commissioners, to the implementations of the risk management, cybersecurity, compliance, and audit function. This is also integrated and applied across all the cross-sector in our financial institution in Indonesia. In addition to that, it emphasizes transparency, business ethics, and the protections of consumer data and information system. Taken together, these elements ensure that institutions operate with accountability, integrity, strong risk management while maintaining public trust and supporting sustainable growth in the digital financial ecosystem. Ladies and gentlemen, risk management may begin with a clear understanding of the overall risk profile. It reflects on the level of exposure across the business, including the inherent risks that arise from daily operations and may impact financial condition if not properly managed. We understand at the same time the effectiveness of risk management is also determined by how well the control systems are implemented. Of course, to ensure this, there are several key elements must be placed, starting from the active oversight, as I mentioned before, by the board, the clear policy and risk limit, the structured process for identifying and monitoring risk, comprehensive internal control system. Together, this form a practical foundations to manage risk in a consistent and disciplined manner. Next, we have, under our digital services that continue to expand, cybersecurity becomes a fundamental part of maintaining trust in the ecosystem. We believe it is not longer just a technical issue, but more core element of risk management. This is the key why approach needs to be more comprehensive from adopting principles such as zero trust to ensure the cybersecurity frameworks, of course, align with the recognized international standards. At the same time, protecting customer assets and data must remain a priority, supported by strong encryption practices and secure storage mechanism. Equally important, of course, is the ability to respond quickly to incidents with clear coordination and reporting. Strengthening these technical capabilities through continuous training and certification is also mandatory to ensure that the institutions are prepared to manage evolving trends. Next, under our customer protection framework, as regulated under Financial Services Authority number 27 of 2024 on the implementation of our digital financial asset trading, including crypto asset, it remains a key aspect of the digital financial ecosystem. This framework is designed to ensure that consumers can make informed decisions and maintain confidence in safety and reliability of the system, supported by three core principles: transparency of information, secure system, and the protections of consumer assets. In practice, this requires institutions to provide clear and accessible information, maintain secure and reliable system, and ensure that the consumer assets are properly safeguarded. Ultimately, consumer protection is not only about meeting regulatory requirements, but also about building trust and maintaining customer confidence in the safety and reliability of these services. From regular perspective, we are continuing to strengthen the framework to keep pace with market development. Actually, in 2025, OJK introduced Financial Services Authority number 23, which expand the scope of the regulation to cover products and activities similar to conventional financial instruments, including digital financial asset derivatives. This is an important step for us in strengthening the role of digital financial asset trading providers and ensure that the markets evolve in a more structured and accountable manner. At the same time, OJK is developing framework for tokenized asset offerings and for the real-world asset. This initiative is intended to support financial inclusion and deepen the market through more efficient utilizations of underlying assets, while providing, of course, legal certainty for both market participants and consumers. Ultimately, this goal is to ensure that innovation continues to grow with a clear, well-regulated, and trusted framework. Going forward, OJK is shifting supervisory paradigm. Supervision is no longer only based on periodic reports, but is moving toward more real-time monitoring supported by technology through closer collaborations between regulators, industry, and of course IT providers. We aspire to be able to integrate OJK supervisory requirements directly into the IT architectures of the industry, so that the regulator, we are not just building rules, we are building trust infrastructure that will scale up Indonesia's digital economy. To achieve this, of course, further collaboration is required as we are developing practical approaches in supervision, such as automated proof of reserve to improve transparency, rapid response mechanism during market volatility and disruption, and the implementations of robust travel rule to ensure secure on-chain transaction, which knows no border. This direction is also supported by leveraging our supervisory technology, SUPAC, including we have API-based reporting that allows data to be submitted more quickly and consistently to regulator, as well as human capital capacity building to operate the whole system effectively. This goal is not only to improve compliance, but also to create more responsive, more reliable supervisory system that fosters the growth of digital financial ecosystem. In closing, as the digital financial ecosystem, of course, continues to grow, our responsibility is to ensure that this growth remains safe, well-managed, and trusted. Regulations is not meant to slow innovation, but to guide it so that it develops in a way that benefits both the industry and consumers. Through strong governance, effective risk management, and closer collaboration, supported, of course, by technology, we aim to build a system that people can rely on. Because, in the end, trust is what allows the ecosystem to grow in a sustainable way. Thank you.